Welcome back. You're watching Market Fatafat right here on ET now. Let's continue with the journey of taking you through stocks that are buzzing based on news flow as well as on technical. Let's bring on board now Osho Krishan. Very good afternoon to you, Osho. Thank you so much for joining us on ET now. And the first stock that you're going to talk about is Emami. No doubt today Emami is also seeing a reaction to the earnings. But on the charts, how does Emami look to you?
Very good afternoon, everyone. Well, talking about the technical charts of Emami, then Emami has formed a flag and pattern breakout in today's session. And obviously the target was near about 500 zone, which already has been tested. So it has given a breakout near the levels of 460 for the immediate upside of 500, and 500 being the psychological level, it can be acting as a very strong resistance zone also. But looking at the overall momentum and the volume that has been gained in this counter, we are expecting that 520 should be tested in this counter in a very short term time frame. Also, if there will be some kind of cool off, because there is high volatility in this counter in today's session. So if there will be any correction towards 480 to 475, that should be acting as a strong support, and one should try to accumulate the counter around 480 levels for the immediate upside of 520.
All right, moving on, let's talk about Zomato and why this particular counter is in focus, because you have a story that in Economic Times that's stating that Zomato has actually started charging a flat platform fee per order that is about ₹2 per order in certain markets for select users. The company, however, has not actually confirmed this particular development. You have a note that is coming from Morgan Stanley, which is actually trying to dissect this particular news development. However, what Morgan Stanley has done is they've maintained their overweight stance on Zomato. They've set a target price of 115 rupees per share. They're saying that in the one is how does they've actually explained how the platform fee is different from the delivery fee. They're saying that the platform fee is a flat fee that's charged per order, while a delivery fee can vary based on distance as well as on weather. They're also saying that the platform fee is also applies to loyalty program members, while the delivery fee for such members is almost nil. The other thing, what Morgan Stanley is also noting is the fact that what impact will it have on Zomato's EBITDA. What they're saying that the platform fee of ₹2 per order is nominal, but may often be overlooked along with other charges. And what they're saying is from P&L perspective, such charge directly flows down to the contribution and EBITDA without any material cost implications. So this is what Morgan Stanley has to say. No doubt maintaining an overweight stance on Zomato despite this particular move. But they also noted that Zomato has not directly confirmed this development.
Okay, moving on, then let's focus to GCPL on the post of the earnings as well as capex announcement. This counter is in focus. Firstly, onto the earnings front, there has been a decline onto the profit of the company on a YY basis. That's a decline of almost 8%, and the number that has come in is at 319 crores. So maybe that is something that is definitely disappointing the markets, because other than that, we have seen a good jump onto the revenue, EBITDA as well as the margin figure, when revenue has come in at 10.4% higher versus same quarter last year at 3,449 crores. EBITDA margin coming at 18.6% versus 16.7%, and EBITDA has seen a jump of 23% respectively. But when it comes to the additional capex plan, that the company has plans to expand their manufacturing capacity by 20%. That's a capacity addition of 20%, where they have approved a capex of 900 crores to setting up new manufacturing site at Tamil Nadu and MP. So on the back of these announcements, GCPL is in focus, but the stock is trading down by around 3% currently.
All right, that's GCPL for you, under pressure in today's trading session. But Osho, coming to you, Bayer Crop, how is this one looking on the charts to you? Do you see further scope of an upside in this one? No doubt on a global level also there is some sort of corporate restructuring happening when it comes to Bayer Crop.
See, overall, if we will be looking at a broader time frame, then the counter is still in the corrective phase. But what we are witnessing in the recent period, that from past 2 weeks, the stock has gaining some kind of buying traction in it, and in today's session we have witnessed a strong spurge of near 5.5% as of now. So from here onwards, one can expect the immediate upside to gain towards the level of 5,000, which again being a psychological level can be acting as a very strong resistance for this counter. So better we should wait for some kind of cool off or correction, specifically for the short term traders, to trade in this counter at the levels of 47.50 for the immediate upside target of 5,000. And once it breaches the level of 5,000, then from there onwards we can see a very strong rebound in this counter towards the level of 5,400. But the first crucial resistance is still intact at 5,000 zone.
Okay, so that's the take on where CropScience is. But Vamakshi, what about India Glycols? You have big discounter. Tell us why this one is in focus.
It is in focus on the back of its numbers and a very strong set. When we look at the revenue, that is seeing a marginal uptick of 1.4%, but it seems like operating leverage has played out for this counter because the EBITDA has gone up by almost 60% on a year-on-year basis. It has increased from 62 to 100 crores. Other than that, when we look at the net profit, that is also seeing a marked improvement of almost 76% on a year-on-year basis. The margins have also improved for this counter, up nearly 200 basis points from 3.3% to 5.3%. Other than that, the company has also announced the expansion of one of its facilities. They have announced that they will be enhancing the capacity of their grain-based distillery at Kashipur, which is in Uttarakhand. They have proposed a capacity addition of almost 200 KLPD, and this is worth almost 160 odd crores. And the main reason for this addition is the increase in demand of ethanol as well as their captive requirements. So all in all, it does look like a good set of numbers for India Glycols, and that is the reason why the stock is in focus today. As of now, the stock is gaining in trade, up nearly 2.7% higher.
All right, moving on then, Coromandel International, Osho, how is this one looking on the charts to you?
On technical charts, Coromandel International has seen a proper rebound in 1 year. If you will be seeing in the last year, August month, it has made a high of nearly 1,070, and this year in the month of August, it has again retained to those levels. So from here onwards, what we are witnessing that it has formed a rounding bottom formation. So any breakout above the levels of 1,070, 1,075 will be giving a very strong boost of near about 250 odd points in the coming medium term perspective. But for short term time frame, one can expect the immediate target of 1100. For medium term time frame, one can expect a target of 1300 in the particular counter.
These are coming to you next to know about GSCL, why this counter is in focus. Tell us more on that.
So GSCL reported their numbers and the numbers, it was quite a muted performance for GSCL along with margin contraction. The EBITDA margin that stood at around 29.3% versus 31% which was seen last year. PAT was higher, and that was because of the demerger of its textile business. The revenue was impacted because of lower volumes of soda ash as well as pressure on prices. So same story like Tata Chemicals, and the management also said that a recessionary trend is seen across most parts of the world and demand is likely to be soft. They said that prices of soda ash that is likely to bottom up, and in the next few quarters there might be a 3 to 5% correction that will be seen. We had the management on our show on ET Now today, and he highlighted that the capex plans, they are on track, and the next 2-3 quarters will see the benefit of raw material prices, lowering of raw material prices as well as new inventory, that those benefits will start accruing going forward. So that's on GHCL, and it's trading flat as we speak.
All right, moving on then, or rather staying with the GHCL. Earlier on in the day, we spoke to the management of GHCL to understand the demand going ahead, as well as we spoke about the earnings. Listen into what they had to say.
Our understanding is in after 2 quarters, probably things will improve, and overall the demand balance will take place. On one side, the raw material prices are also going down, and of course the soda ash prices are also going down. My understanding is some softness still may happen in next few quarters, probably, but the impact on the margin will not be very significant because the raw material prices are also softening. Maybe another 3 to 5% kind of a drop can happen from here. Buyback is always on our radar. We will consider it at an appropriate time, and also we will be liking to have some kind of investment will be required for our greenfield. So, yeah, probably that kind of a range will be there, 5 to 10% kind of a volume drop.
Okay, on to the show. Let's move on then. And Osho, coming to you to know about Equitas Small Finance Bank from the financial space. How is this counter counters are you looking at, and what are the levels that we should be watching out for?
See, overall, the technical setup for Equitas Bank is very bullish because looking at the overall broader time frame also, we have witnessed the cycle of higher highs, higher lows in this counter. As of now, the counter has corrected approximately 15% from the highs of 100 levels and currently hovering near the 50 SMA. So that means from looking at the historical charts, 50-day SMA and 100-day SMA has provided a strong support to this counter. So looking at the overall technical setup, it is very much likely that from here onwards we can see a strong rebound in this counter. On the lower end, the support is very nearby, approximately 85 level, or the zone is somewhere where we can expect a strong demand, and on the higher end 100 is the level where we can see the instant resistance. So from here onwards, on risk and reward perspective also, the counter is very lucrative for short term, even for medium term traders.
Alright, moving on, let's talk about Genus Power. In this particular counter was seeing a sharp up move in today's trading session. It hit a record high level as well after an up move of as much as 7.5%. Right now the stock is trading higher by about 6%. It's the third consecutive day of gains coming in for Genus Power, and on an intraday basis, its biggest intraday jump since July 17. And what's actually contributing to this sort of a rise in the stock price is the fact that it's bagged an order worth about 2,210 crore rupees, and this is under the revamped distribution sector scheme. So on back of that big order win of 2,210 crore rupees, you can see Genus Power now actually surpassing a previous record high levels, in fact hitting a fresh record high level in today's trading session, and also gaining for third consecutive session.
Okay, let's shift focus to another counter which is not just gaining but locked at an upper circuit of 5%. That is Jupiter Wagons, and that's after a stellar set in Q1 where now the company is actually into the CV manufacturing as well as what they highlighted back in Auto Expo, and maybe that must have helped the earnings of the company. And if you look at the numbers this time, what a substantial jump onto their revenue, 155% growth on a YY basis, the top line being clocked at 753 crores. When we talk about the net profit, that also zoomed around 386%, and from 13 crores same quarter last year, this time the number stands at 63 crores. So that's a 6 times jump onto the bottom line. When we talk about the EBITDA margin, that has also seen an improvement from 10% to 12.8% this time around, and EBITDA also seen a growth of over 200%. So on the back of a stellar set, Jupiter Wagons has been locked at an upper circuit since the start of the day.
Alright, that's Jupiter Wagon for you. But also let's talk about Dixon Tech. A lot of news flow surrounding this particular counter, leading it to see a sharp spike in trade of late. But on the charts, do you think that the spike that Dixon Tech has been witnessing on back of news flow will sustain going ahead?
With the inception of August month, we have seen a strong rebound in this counter. If we will be looking at on the weekly time frame, then we can witness a strong flat pattern breakout in this counter. So that means for the pattern breakout, we can expect an upside target of near about 5,800 to 6,000, but that is something on a short to medium term time frame. For short term traders, because the counter has seen a very strong rebound in the past 4 trading sessions, so there can be some kind of breather that we can expect in this counter towards the level of 47 and 4600. So that means 46 to 4700 should be acting as a very strong support zone, and any cool off around these levels one should try to accumulate at these levels for the immediate upside target of 5200 on short term, and from medium term 5800 to 6000 zone.
Okay, so those are the levels you need to be watching out for Dixon Tech. But Lisa, what about ITD Cementation? This is the counter you have picked up. Tell us what's buzzing in this particular name.
Well, the stock is in focus on the back of strong results that it posted. We can see the stock is up around 6% now. Talking about the results, it has posted its highest ever quarterly revenue of around 1,833 crore. This is up around 67% on year-on-year basis. Even the profit that surged around 74%. EBITDA jumped 74% on year-on-year basis. So this stock, it has touched a 52-week high of around 199 per share. Talking about its order book, it stood at around 18,517 crore as on 30th June. Quite a strong order book ITD Cementation has, and it also secured orders worth rupees 247 crore. So that's why we can see ITD Cementation soaring in trade today.
All right, as you can see on the bottom of your screen, Adani Ports numbers. We'll just wait for some more numbers to trickle in and then we'll address this particular stock. But Osho, coming to you, Titan, how is this one looking at the charts?
See, overall in Titan, we have seen a very decent cool off or profit booking in this counter. As of now, 2900 is the zone where it is hovering or finding a support. So from here onwards, one can expect that the consolidation should continue for, let's say, 2 to 3 more sessions, and afterwards we can expect a decent uprise towards the 3050 on immediate basis, and again the counter has the potential to retest the highs of 3200 from short to medium term time frame. Also on technical parameters, as the counter has seen a very drastic up move from the levels of 2300 to 3200 zone, the counter has been on the overbought position, but because of the recent time-wise correction, there has been some cool off even on the technical parameters. So all things summing up to very strong bullish setup in this counter, and after 1 to 3 days or 1 to 2 trading days of consolidation, one can expect a decent rise for immediate basis 3050, and on the positional basis 3200 should be the target that one can expect.
Okay, so bullish on Titan from here on, but Vamakshi, tell us what about Inox Wind? That stock is already up 4.5%. Tell us what's the news flow in this one.
Well, Srishti, if you remember, a few days ago, we did come out with a news flow wherein we highlighted that there were large blocks that were expected to happen in Inox Wind, and that has indeed taken place today. Sources are telling us that Nippon India MF, ICICI Pru MF, Bandhan MF and some FII investors have acquired stake in Inox Wind. Now, a block deal of almost 500 crore was seen. FIIs had nearly 2.6% stake in the company as on June 30th, and in fact another trigger that is working well for the company is that the company delivered strong results along with Inox Green Energy. Now, going ahead, there are a lot of triggers lined up for this counter. Channel checks are suggesting that there are some strong bidding works in progress. In fact, the Gujarat government has also issued tenders for almost 1000 megawatt wind power project. As far as Inox Wind is concerned, the order book is full for the next 18 to 24 months. Profitability is expected to triple in FY25 over FY24, and in fact, the company has also received global certification for wind turbines. So that is the reason why Inox Wind is in focus today. But keep in mind that the stock has recovered almost 120% from the lows that were seen back in Feb. As of now, the stock is up and away, up nearly 4% as we speak.
All right, that's Inox Wind for you, but let's talk about another ET Now news break that has got confirmed, and that's on back of that you have Adani Green that is soaring in trade in today's trading session. Remember yesterday on ET Now we told you that QIA, that is the Qatar Investment Authority, was the one who was set to pick up that stake in Adani Green because you saw a block deal take place of approximately 2.7% equity. What we got the confirmation later on is the fact that QIA's unit actually ended up picking up that stake in Adani Green via block deal, and promoters of Adani Group raised about $500 million via selling the part stake in Adani Green via block deal, and QIA's unit, that's InQ Holdings, is the one that picked up the stake. On back of that, you saw the stock actually soar as much as 5%. Right now, as you can see, the stock is still holding on to gains about 3.7% as we speak.
Okay, so that's an ET Now news break being confirmed. But moving on, and Osho, coming to you to know about NAM India. Tell us how the chart's looking like for this one.
NAM India recently has seen a very strong spurt in the price action from the levels of 260 towards the zone of 300. Again, there has been some kind of consolidation, and again we have witnessed a breakout above the level of 300. So as of now, post the recent breakout, the stock has underwent some correction or cool off that is very much healthy post reaching the overbought region. So we are expecting that any dip towards the zone of 300, that is the neckline of the breakout, should be acting as a very strong support. And again, we can witness a strong buying traction in this counter for the immediate upside target of 320, and even surpassing that, one can expect 345 from short-term perspective in NAM India.
Alright, let's now shift focus. Let's talk about Adani Ports numbers. We have more numbers actually trickling in for that particular counter. If you look at the profit, it's coming at around 2,115 crore rupees. This is a beat as compared to ET Now estimates about 2,000 crore rupees. Even the revenue number has actually surpassed the ET Now estimates. The revenue numbers have come in at around 6,248 crore rupees. Remember, all of these numbers are consolidated numbers. If you look at the EBITDA as well, it's a beat coming in for the EBITDA. The EBITDA is coming at around 3,765 crore rupees. We were expecting it to come in at around 3,500 crore rupees. So that's Adani Ports for you. Yes, the stock did see some recovery post announcing its numbers. A tad bit of downtrend coming in now for it. But for now, on the profit front, on revenue front, as well as EBITDA front, Adani Ports has beaten 18-hour estimates.
Okay, moving on, let's shift focus to BEML now. That's counter is in focus on the back of a new order win, and that's a whooping order of 3,177 crores, which the company got from Bangalore Metro rolling stock supply order. And on the back of this news, this counter is in focus. But for today, what we are seeing that is interesting on the charts is that the stock has touched its all-time high levels and finally making a move above that 2,000 rupees odd levels. Though after the back of with the markets, the stock is seen to be drifting lower after the opening session, but nevertheless still holding a gains of 2% on BEML right now.
All right, that is BEML for you. That is in focus in today's trading session. But Osho, coming to AIA Engineering, why is this one in focus?
Overall, the engineering sector counter are looking very promising as of now. Most of them are having a very strong buying traction. And looking at this particular counter, we have witnessed a very strong technical setup, even with the close that we can expect in today's market above the levels of 35.50. So that will be a highest ever closing in this counter, and the trend should continue towards the zone of 36.50 to 36.80 in, let's say, 1 to 2 trading session. So that means short-term traders should definitely try to accumulate this counter for immediate gains of 2 to 3% in positional 1 to 2 trading session. Overall, the technical structure is very robust, and one can expect a decent rally, the rally to continue for a short to medium term time frame also. On immediate basis, 36.70.80 will be the first target, followed by 3800 over a period of time.
Okay, so that's the day coming in on AIA Engineering. But Osho, once again coming to you, you have also picked up Praj Industries. Tell us how the chart's looking like for this one.
The Praj industry also is looking very, very promising as of now. It has given a breakout above the level of 450. So from here onwards, we can expect a very strong rally in this counter because the buying has been backed by robust volume. So from here onwards, one can expect 475 to 480 on a very immediate basis, let's say 1 to 2 trading session. Post that also, we can expect the trend to continue, but one should not be complacent because there has been the rally has been there since past 3 to 4 trading sessions. So some kind of cool off can happen. So on the lower end, 455 to 450 is should act as a very strong support zone, and one should try to accumulate around 455 for the higher target of 480 in short term time frame.
All right, so that is Praj for you, but let's move on, and we'll show you first on ET now, and now it's confirmed. SEBI is on track to introduce MF light regulations for passive funds soon. My colleague Ankur is here to exactly tell us what's the contour of the said regulation that's yet to come into play. Ankur, over to you.
Looking to introduce mutual fund light regulations very soon. Now, this is something which ET now had earlier reported on May 4th that the regulator is working on the idea of considering light regulations for mutual funds. Now, this is something which is considered for passive funds. Remember, for active fund managers, there is discretion at the level of a fund manager whether or not to invest in some stocks or inclusion of any strategy. But the regulator believes that since in passive funds investments, there is no such discretion which is required for the fund manager, the regulations needs to be lighter. The requirements which are currently there for mutual funds are considered based on the active fund management, but for passive fund management, such kind of light regulations were missing. And now, as per annual report, SEBI has revealed that the fund managers may not be required for such kind of regulations, and light regulations may be considered by SEBI, and this will not only improve the compliance burden which is there for mutual fund companies, it will ease that compliance burden, and as far as the market regulator is considered, it also feels that it will foster innovation in the field of mutual funds.
Well, thank you so much, Ankur, for getting us all those details. So that's an ET Now news break getting informed. But with this, viewers, we are completely out of time in this edition of Market Fatafat. Lisa, Vamakshi, as well as Osho and Kunal, thank you so much for joining us today on ET Now and highlighting all the stocks that are buzzing in trade currently. But with this, me and Cheryl will also take your leave. It's a goodbye from me and the entire team who put the show together. Thank you so much for watching, but don't go anywhere. Closing trades will take the action ahead.